All right, good morning. It's Wednesday, December 3rd, 2025. Just after 10:30 on the East Coast. This is Rob Sin at CEO Technician on X, at Goldfinger on CEO.ca, and this is Goldfinger Capital on YouTube and Substack. So my 2025 tax law silly season list is live. Published it Tuesday afternoon, and it is now available for all to digest and consume. So, what is the tax loss silly season shopping list? This is something I've been doing every year since 2017. And I must say, I went back and I reread some of my older editions. And like many things, I cringed reading it. But look, we're all getting a little better every day. We're learning new things. Um, and honestly, maybe the information we had at those points in time in the past was just incomplete, and we were doing the best with what we had at that time. But anyway, I mean, it's not that bad. I mean, I've had some pretty good picks in the past on these lists. I've had some pretty bad picks too, including last year. But really, look, this is an idea list. This is something to augment the due diligence, the work that you're already doing as an investor in this sector. Um, I don't want anybody to just take all my picks and that's all you focus on. You need to be doing your own research and finding your own ideas. I mean, after all, there's like 1,000 or more junior mining stocks, right? So the universe is very large. There's many more good ideas, tax law, silly season candidates than just the ones that I, identified here. But definitely read the article. Listen to this interview with Shad Markowitz of the KE Report, especially starting around the 21-minute mark, where I describe why the tax law silly season has such a strong seasonal tendency each year. And you can see, here the TSX Venture Composite is like kind of one of the better proxies we have for the Canadian micro cap space. And then, also the junior mining sector is definitely not a perfect correlation to the junior mining sector because there are components of the TSX Venture Composite that are not gold mining stocks. They're not mining stocks. They're tech stocks or they're crypto stocks or they're biotech stocks, right? But generally speaking, the Canadian microcaps tend to move in a pack. They really do, especially around these important points of the year. So, like around the holidays, end of December, early in the new year, they tend to move together, even though they're different sectors of the stock market, right? And so you get this very strong tendency for the junior mining sector to put in a tradable low in December. And we don't know the exact day in December. It could be the 5th, it could be the 10th, it could be the 15th. But usually by the middle of the month, pretty much all the tax loss selling that's going to happen has happened. Like 99.8% of it is usually done by, let's say, the 16th or the 17th of December each year. And then we start to get a lift as we get closer to Christmas. And then certainly after Christmas, people start to look forward to the new year. And suddenly the psychology switches from tax planning and risk aversion to, new year, new opportunities, excitement, and optimism. And then people start focusing on like catalysts, like actual specific company catalysts in January. And the sector usually does pretty well. So, whether it's 3 out of 4 years or 4 out of 5 years, the tendency, the seasonal pattern is about as good as it gets. It doesn't work every single year. Nothing works every single year, but 2 out of 3, 3 out of 4, 4 out of 5 is good enough for me. It works more often than it doesn't. Now, this year's list is a little different because 2025 has been such a strong year for gold, silver, copper, for mining stocks, for the Canadian gold producers, right? And it's trickled down to the juniors. So I had to get a little creative. Not every single stock on this year's list is a red year to date. I had to really think outside the box and focus more on really the opportunity and the valuation today and the potential upside I see in 2026. And to some extent, each stock on this list is depressed. It may not be actually down year to date in 2025, but the valuation and the history of the stock is relatively depressed. Okay, so that was my assessment for each of these. I'll let you read through it yourself, and let's just go through last year's list. So, I had 4 winners last year on last year's list. I had one big loser, and I had one stock that was basically sideways, right? So Hercules Metals. Some people say, "Oh, but Robert, you picked it at 57 cents, and now it's only 62. That's less up, up less than 10%. That's not a winner." Well, actually, it is, and I'll tell you why. First of all, it's up, so that's a winner. Second, this list is basically a trade idea list. So the idea generally with the tax loss silly season trade setups is to get in at some point in December. So this month we're buying, and then to book profits, or either take all the position off or take a partial piece of the position off for a profit in Q1. And then up to you if you actually like the company long term and you want to hold it as a core portfolio position longer term past the end of Q1. That's up to you, right? That's something that you need to, decide on your own. But just for the tax loss silly season trading pattern, generally the trade is buy in December, sell in Q1. So that could be January, it could be February, it could be March, but generally we're not holding these trades past the end of March of the next year, right? And so in the case of Hercules, 57 cents was the entry in December. And yeah, there was some volatility. It went to 65, it dropped to 52, but basically it churned sideways until end of February, and then it rallied up to like 78 cents in March. So it gave you a perfect exit point to take a 30 or 40% gain off the table there in Q1 2025. So that's a winner. There's a few other winners. Kingfisher was a winner. Basically, this one, we got in at 18 cents in December. It never really went into the red. It kind of churned sideways for a bit there in January, but then it started to lift in February and March. And basically, if you held it until March, you had almost a double. Very, very quick out of the gate. Within 3 months, the stock doubled. And then obviously it went all the way to 49 cents in August, and now it's way down, and that's why it finds its way back on this year's list, right? But Kingfisher would be an example of a textbook tax loss silly season trading pattern. Like if they all went like this, we'd be way, way ahead of the game. The loser was Barksdale Resources, and I want to emphasize this one because it shows you the risk of these stocks, of the sector. And frankly, when I put Barksdale on the list 1 year ago at 15 cents, I really thought the downside was like 25 or 30% max. Boy, was I wrong in that assessment. And that's why we have to keep an open mind, and we have to really appreciate the volatility and the risk of the sector. When things go wrong, they can go really, really wrong. And Barksdale, first half of 2025, I would say basically a worst case outcome. The stock dropped from 15 cents to 5 cents. So that's almost a 70% drawdown. And obviously, anybody who was holding that stock for the tax loss trade got stopped out probably and took a loss there in early 2025. Basically, everything that went wrong. It was a worst case outcome. I'm not going to go through the details of the story. That's not the point of this post, but just the risk. So please, eyes wide open. All of these stocks, all junior mining stocks, are very risky. They can have enormous volatility, and very few go exactly according to plan, like Scotty Resources. So literally, Scotty, I got in back over here. It dipped a little bit at first, but I was never really down. It just kind of went sideways. It went nowhere the first half of 2025. So you had to be patient. I mean, yeah, you could have sold at a small profit there early in the year, but this is August, September of this year is when it really took off, right? The stock more than doubled in a very short period of time. So sometimes you can't time these things, right? But the fact is that if you're never really in the red and your thesis is intact, the reason why you bought the stock in the first place, then there's no reason to exit. So you just sit in there, you bide your time, you try to be patient, and then the catalyst comes, right? Sometimes the timing of the catalyst can be really unpredictable, right? And it arrived for Scotty. All right. So 4 winners, 1 sideways. Pex was a sideways one, and 1 loser, Bro Barksdale. And, the biggest winner was Patriot Battery Metals. And I also want to really emphasize the volatility here as well. So, the initiation price was like 260, somewhere in here. Within a very short period of time, like literally a few weeks, I was up 35-40% on Patriot, right? So that would be natural to take some profits. But then look at what happened next. In early 2025, the stock dropped out of bed, dropped over 50%, hit a capitulation low in April of 168. And only then did it begin forming a bottom, and then had a very strong second half of the year, rising all the way up to 515 just recently, right? So literally 52-week low 168, 52-week high 515. It's pretty volatile. That's a pretty big range, right? So you have to account for the volatility in these stocks, and that means your position sizing must account for the implied volatility, the realized volatility, right? The average true range of each of these stocks. Please account for the volatility. Don't position size too heavy. The worst thing is going too heavy and then not really being able to stomach the volatility and then getting shaken out at just the wrong time, because that's what the market will do. If you don't plan well, the market will shake you out at the exact worst time, and you'll do something stupid like selling PMED in April, right? And then watching it rip your face off and go right back up, right? So you don't want to be that sucker. It's better to size smaller and be able to persevere and have have the staying power, right? So some of the names on this year's list. Look, I want you to read the article yourself. I want you to go through the company presentation, look at the SEDAR Plus filings yourself, talk to the CEOs. Don't take my word for it, but let's just go through it. Kingfisher Metals. Honestly, this is probably my highest conviction one on this year's list. Okay, I just believe the Highway 37 project is a tier 1 copper gold project in the Golden Triangle. It's an elephant country. Stock is super oversold. Everybody just dumped after the first, drill result, saying, I'll get back in next year. I'll get back in next year. I don't think the selling is a rejection of the company or the project or the management team. I think it's just everybody's just saying, I'll buy it back in January, February, or March. There's no hurry. They're going to do a financing, right? So everybody has the same psychology. And that's why there's an opportunity here, right? That's why there's an opportunity at 22, 23, 24 cents a share, okay? The Hank target. So this slide, the Hank Porphyry target, and we still haven't even gotten the assays for hole 2511. By the way, Kingfisher will be presenting hole 11 at the PDAC Core Shack. So that's going to be super cool. But you know, this is a hell of a porphyry target, right? Like this is about as good as it gets in terms of resistivity, chargeability patterns, and then the alteration that they're seeing in hole 11, which is interpreted to be on the periphery of the actual core of the system. But as the hole went deeper, it got hotter, it got warmer. Like it looked like they were getting closer, and just the patterns. I mean, it looks like a porphyry center, right? Like everything looks like this is a porphyry center. There's a huge area that's untested. There's big scale potential at Hank. And then, on top of that, you have, the epithermal bulk tonnage gold. So like 110 meters of basically a half gram gold. They need to step out and get a better grasp on the near surface bulk tonnage gold potential. But I believe that that's what they're going to be doing in 2026. So I really like Kingfisher. Yeah, I mean, you can say it's seasonal. They only have a 3-month window of opportunity each year, basically like end of June through September. But I believe in this one. Like I believe this year the drill program has a very good possibility of making a discovery that really matters, right? And at this valuation, even if you go fully diluted, toss in all the warrants, it's a very low valuation. It's not. I mean, when we start talking about large scale copper gold porphyries, I mean, we should be, starting valuation, we should be talking like 200 million market cap. So we're nowhere in the ballpark right now with Kingfisher. Okay. GSP Resources. So this is also BC. This is also Porphyry Explorer. They have a couple of very nice porphyry targets at the All-In Mine project. This is literally adjacent to Teck's Highland Valley Copper Mine. Read it. There's a lot to unpack here, but basically the summary is the valuation is really low. This is not greenfield, shot in the dark. Let's do some IP and hope we get lucky kind of drill target. They already have 1.5 million tons at an average grade above 1% copper, right next to the largest copper mine in Canada. So that's the starting point. You can look at the market cap. I'm not even going to say it. It's so low. That's the starting point. And now we have all the exploration potential at multiple target zones that will get drilled in early 2026. Okay, so I'll let you dig into it yourself. And strong insider buying and ownership in this one, I think 25%. Yep, 25% held by management and insider. Super tight share structure. StrikePoint Gold, Nevada, Walker Lane Trend. Again, cheapest chips. Like, look at the market cap on this one. Look at the drill results at the Hercules Gold Project. Okay, what has been drilled by StrikePoint and other operators in the past. Check out the scale potential. I mean, it's not a big stretch to say there's 1 million ounces of gold here already. And then imagine if they step out, expand the known zones, or make new discoveries, right? So, and then look at the market cap, right? And the catalyst rich 2026 coming up, especially in the first half of 2026 with the next phase of drilling here. Ramp Metals, this is just beaten down, oversold, quintessential tax loss, silly season pick. Market probably got way carried away on the upside at 177. You might make the same case that it's gotten too carried away on the downside at 27 cents. So we're on the other side of the pendulum to where the company was in early 2025. The pendulum swings both ways, and we just have to navigate it as best we can as investors and speculators in the sector. But catalyst-rich environment in early 2026 for ramp as they ramp up for an aggressive drill program at the Rottenstone Southwest project. And I just saw this morning they got the drill permit, the expanded drill permit. So it's all systems go here. I think it's a great setup. Standard uranium, Athabasca Basin, Uranium Explorer. Look at the weekly chart. So I love when the fundamentals are aligning with a bunch of impactful drill programs coming up over the next 6 months for Standard. And then the chart has this nice wide base, head and shoulders bottom. Look, the neckline is 15 cents, and 15 cents happens to align with the exercise price of a bunch of warrants. But imagine those catalysts start to come in spring 2026. They have good drill results, and then it rips through that neckline. That would be a really nice setup. So we got the bottom in the chart. The chart pattern bottom is forming. It's not completed yet, but it could be completed in the first few months of 2026 as the fundamentals improve and the catalysts start to hit for the company, right? All these drill programs they have lined up. So check out Standard Uranium. And then Perseverance Metal. So this is the dark horse, the new kid on the block. Call it what you want. It's a freshly public company, very low valuation. It has not traded well since it went public. It briefly got up to 90 cents, dropped to 44 cents earlier this week, so it got cut in half. Look, the volume is pretty thin. The trading float on this one is pretty thin. Don't bid this thing up crazy. Just understand it's a pretty thin trader because there's just not a whole lot of stock out there in the market. But you can get filled on 5 or 10 or 15,000 shares pretty easily, right? But early stage explorer focused on copper and nickel, cobalt, PGEs in Ontario and Quebec and Michigan, the Upper Peninsula of Michigan. And again, catalyst rich environment in early 2026 as they go out and they drill for the first time at the 100% owned Voyager project in the UP of Michigan. And that's a whole nother video. Maybe I'll do an interview with the CEO, this guy, Michael Tucker, and we'll talk about Voyager next year. We'll see. But that's a very exciting area that has basically, it's virgin territory. Like for all intents and purposes, modern day exploration, it's virgin territory. There's a good chance that there could be a discovery made there at a time when it could really matter for Perseverance shareholders, for Michigan, and for the United States. So that's the list, guys. Please check out these companies on your own, do your own due diligence, and let me know what you think. Open to feedback. Hope you enjoy this list. And again, please manage risk and don't bet more than you can afford to lose. Thanks for tuning in. If you enjoyed this video, hit the like and subscribe button, and have a powerful rest of your trading week and a happy holidays.